Standard Chartered Bank, Diamond Partners, PayU, AWS, Kia.ai, Infrasoft, and Paytm, and our networking partner, Buddy Loan. With that, PA off. With that, we start with the fireside chat on importance of alternative data and emerging technologies to improve credit decisioning and prevent fraud. And for that, for the fireside chat, we have with us Mr. Sachin Seth, Managing Director and CEO, BSE Ebix Insurance Broking, and Mr. Bikram Singh, Head of Credit Services and Strategic Initiatives at Experian India. Over to you, sir.
Thank you so much. Yeah. Thank you. And really wonderful to be here, talking on the topic, which is like talk of the town for last many years, that, how to make credit process or underwriting and decisioning process more and more enriched with non-financial data. And I'm sure many of you have heard this, say that data is a new oil, data is new gold, data is new whatever it is. I would say data is a new sunlight. We are talking about all green energy. So sunlight is in abundance. It's up to us to see how do we use it. So probably that's a phrase I want to start with and ask my panelist here, Bikram. Welcome here for the discussion.
Thank you, Sachin.
So Bikram, just starting the conversation between us on this topic. I mean, all of us know that the credit decisionings, fraud detection, everything is happening on financial data for ages, right? I mean, there has been a traditional way of doing it, etc. But of late, I mean, data is flooding in from all sources, right? Now, how do you really make out that, what kind of data is relevant in the, process of making a credit decision? And, coming from a very strong background of the bureau and, credit decisioning practice, how do you see that, what kind of sources do you think is relevant for this kind of approach of alternate data?
Yeah, thanks for that, Sachin, and very good afternoon to everyone here. Pleasure being a part of this panel. Sachin started with saying that, data is the new oil. Let me just take 2 steps back and say that oil comes from crude oil, and, alternate data is just like crude oil. Let me put it that way, an analogy to that. Because reason is that crude oil in itself is of no use. But the minute you start processing crude oil and you make, jet fuel out of it, or you make petrol out of it, or you make diesel out of it, is when it starts getting used. Same is the case with alternate data. So alternate data is, in another analogy, is just like pieces of Lego in different shapes, forms, colors. And it depends on how you join them together to make something out of it. Now, different, companies, different people, different industries have different ways of looking at alternate data. Some people look at it for a very specific niche understanding of a need of a consumer. Someone looks at from a risk management perspective. Someone looks at it from a consumer profiling perspective. Having said that, I would not say any one of these is wrong, but alternate data has to be used in a very different fashion. If I have to put it, in simplistic form, the right alternate data, when used, can improve, predictive model, can improve the risk models, can lead to fraud detection, and needless to say, can lead to lead scoring. So here it's a combination of both risk, credit, and business. So when we look at alternate data, it is coming in from various ways, means, forms today. A simple thing like a handset that all of us carry, and that's the most popular one people talk about alternate data, is that it gives you a lot of information on the consumer's preference, consumer's location, consumer's spending pattern, consumers' choices on certain things, and all that stuff. But when you look back, and you look at alternate data holistically, one should not look at it in silos. It has to be combined and looked at it holistically. And that's, if I might say, what is our meticulous approach to alternate data? To me, when one looks at it holistically, one, it has to have a broad and consistent coverage. Two, it should be, it should have accurate updation, and the frequency of updation has to be, there, because, since the data is so dynamic, a data which on a consumer might be there 3 months back or 6 months back might have changed on the same consumer in terms of the preferences. It should be very specific in terms of the info which it is providing on the consumer. It can't be all over the place. So, if you're trying to figure out a consumer from an e-com perspective, it has to be very, very specific in terms of what you're trying to understand from that data. You know, can it predict a consumer behavior, as an example? So that's an important part of, alternate data that one has to look at. And since I come from a bureau, as Sachin mentioned, can it complement the bureau data? See, eventually everything starts boiling down to the fact that today a lender will look at a combination of substances when it comes to any lending decision to be taken. Lenders are becoming more and more, I would say, forward-looking in their approach from only looking at bureau data to, looking at alternate data now. And that's something which is encouraging. But still, I think the experimentation and the way data is today getting used is still very limited. And there's a lot more we can do around, with that data. I'll just take, a number or quote a number. So there is this annual survey which the government does on, the workforce of India. And it's slightly outdated, but relevant even that today it would not have changed much. So for the year 2021, if I remember it correctly, that workforce survey of India said that there are about 14 or 15% people who have a salaried job in the country, in the workforce. There are about 55% who are self-employed, and there are about another 25% who are in casual jobs, and then there are vocational jobs. Now, why I mentioned about this data is because of the fact that the most sweet spot for a lender has always been salaried. Why? Because data is structured. You are able to estimate a consumer's income, his employment details, his stability, and to a large extent, the possibility of fraud is much lesser when it comes to salaried vis-a-vis the other side. But now let's look at it, it's only 15% of the population, the workforce. 85% still lies outside of it. And that's where alternate data plays a role. And that's where, alternate data becomes extremely important if we are talking about, democratizing credit, last mile connectivity, so on and so forth. Good terms to use, but then how do you end up servicing the consumer? How do you end up getting him into the mainstream of credit? That matters a lot. And that is where, again, this kind of data sets become important. And that's, what I think. And I think it's not only limited to credit as an example, Sachin. I think similarly, other industries like insurance, as a matter of fact, and we are an underinsured economy, underinsured, country, can use it to a lot of benefit. And actually, you might be able to shed some light on that how can that be used on the other end of the spectrum as well.
Wonderful. Bikram, I think very well said as far as the credit side is concerned, and really, good insights. As I think it's more of a conversation, and then you wanted me to bring in the insurance perspective. I mean, it's really amazing that some of the things which are happening and how data can prevent them from happening, right? Whether we are talking about underwriting process or we are talking about fraud process. I'll give you an example. I don't know whether some of you noticed, I think about 2 or 3 days back in the newspaper, there was a small article about, a mechanic had purchased a car which was salvage, or which was basically classified as something to be sort of, completely sort of, scrapped, right? And basically this mechanic purchased this car in Bombay, I think in western suburbs. And this mechanic was trying to really salvage the car to make it workable. He had bought it in an auction. Now, very interestingly, when he visited, basically he got a, information that on the same number of the car, basically there are SMSs coming of the traffic violation. Now, how can a car which is in the garage in Mumbai in a completely, broken condition can have the sort of a traffic violation happening in Pune? And the traffic violation was happening in Pune. Now, there's the beauty of data and surrogate data and how the fraud gets caught. So he approached the police and he said, I'm receiving these, messages, but the car is not even in a working condition. So police got in action, and in fact, they figured out that actually when insurance company scraps the vehicle, there are certain people who actually take that data. They actually then steal the vehicle of other people. They put this number plate and change the engine number, etc., engine plate, and they are selling those cars in the market, and those cars are being sold as some used car. So you see how the correlation is, right? I mean, there is a car which is actually originally carrying that number of RTO is in non-working condition, and there are two cars running in Pune with the same number or similar numbers and doing traffic violation. And how do you catch them? Because traffic violation nowadays in every city is captured digitally, right? So when you capture digitally, you basically are able to send the SMS to the owners, etc. So I'm just sharing with you, the kind of frauds are happening and where the data is becoming, very, very relevant. Another point I wanted to bring, Bikram, from insurance perspective. In fact, I think many of you would have seen that, insurance companies are also launching new innovative products. They are doing different kind of underwriting, credit decisioning, etc. And of late, we have seen that, pay as you drive or pay how much you drive, right? So these kind of products also have been launched very recently. I think there is a lot of innovation happening in that. Interestingly, there are devices put in the cars with the permission of the, the owner of the car, and it's a driving behavior which is being captured, or the usage of the car which is captured, right? And this is like a very, very powerful alternate data which can actually, if regulators allow, tomorrow could become one of the credit, the surrogate data, because you would be able to understand the behavior of a owner of a vehicle, whether it's a car or a bike or anything, and you would be able to correlate it to the financial aspects of it, right? And that would also become a very, very important. Third thing, Bikram, I just want to add that I think the amount of data being captured from a lot of other surrogate sources. I mean, I without naming specific startups, I mean, I'm sure they are doing a great job and they are within the purview of the sort of data privacy guidelines. But you might find that, some startups have solutions wherein they will manage the parking of a, building or a hospital or a corporate. And very interestingly, you would notice that, the kind of data they would generate out of it, right? I mean, which clearly shows that, which car, and it's also connected to the FASTag, right? So the movement of the people, how much time they are spending where, what exactly they are doing, if there is a correlation of that this person working in this company, it can be correlated with the parking data, that whether the car the person owns actually goes to that building where the, the person is claiming to be working. And that's what we talked about, the salaried class, etc. It could be about the business people also, right? So I think those are the kind of sort of things happening, and I'm sure not everything is sort of exploited enough in this, but with the regulatory frameworks becoming more and more tuned towards sort of driving the credit growth in a structured manner and basically helping organizations find more and more about the sort of borrowers, right? I think this will become a lot more sort of progressive thing, right? So Bikram, coming back to you, your thoughts on, I mean, just a use case wanted to share, and this is completely out of the bag, so it could be just a extempore surprise. Tell me that all these people who are attending this GFF here, and they are actually posting on their social media that they are in GFF, they are doing this, they are doing that, Twitter, Facebook, Instagram. Can this help a lender, understand the behavior of or classify them in a particular bucket with using some of this data? And can this also be useful?
Am I audible? Yeah, okay. I think yes, to an extent, yes. No, I would not jump to a conclusion on how it can be used. But, as it is said that no data is useless data if one looks at it. But let's look at it, the minute you post something that I am in GFF and I'm attending this and all that stuff, it kind of translates into the kind of profile that you have, and then your profile then further translates into the kind of consumption behavior or consumption pattern you will have. So those kind of things when fed into the system, and see again, when we look at data, there are a lot of people who gather a lot of data, and you mentioned about it. Uh, Gathering of data is, I think, the least of what any smart data company can do. It's about how you are able to make sense out of that data. So important things like are you using AI to make sense out of that data? Are you using deep learning? Are you using anonymized metadata? And why I use the word anonymized in particular is because of the fact that with all due respect, as you mentioned about this parking example, there's a lot of misuse of data which happens. Customer does not know that his data is getting used. Consent is not taken. And today, forget anybody else or the consumer. The government and the regulator is now very, very clear on this, that you will not take that data of a consumer which is not relevant for a certain decision making for which you are trying to work with him. So for example, in the latest digital lending guidelines which the RBI came out with, they've clearly called out that only that data has to be taken and used which is meant for that decision making. Don't keep on carrying and gathering data of consumer without that use. So the minute it starts feeding into that data and starts talking about consumer preference, consumer profile, there's a lot more to offer from that data. I'll give you another example since you mentioned about parking. A lot of us stay in condominiums which have a entry exit system where if some visitor is coming to your home, you will be notified either through a phone call, but now phone calls are outdated, so you have apps which notify you, and those apps also are in turn your society billing apps, blah 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 and all that. Now today those apps actually are capturing data on you, in a manner where they are able to profile you to the last T. So I'll give you an example. Problem is that a lot of data becomes heterogeneous. Now look at this data which is getting captured. Now let's say you stay in JVLR in Oberoi Splendor, just an example here. Now that's a very homogeneous set, which means if you're staying in Oberoi Splendor, you have a certain profile, you belong to a certain income band, you have a certain preference for a certain location and a certain kind of condo that you want to stay in, and if you apply for a loan thereof, the lender is able to relate to your profile very, very fast and simply on those lines. Plus, what is this app able to do there? The app is able to even figure out whether you are a guy who's carrying a home loan or you are a tenant. The reason is simple, because over there, when you register for that app, you have to say whether you're an owner or a tenant. Now, it means that tomorrow, if they go and tie up with lenders, the lenders know whom to reach out for what. So if you're a tenant, it means aspirationally you want to, maybe buy something in that same condo because you're staying, or similar condo because your life cycle, your quality of life or your life cycle is such, and that's how they can actually do very, very targeted, reach out to them. So to me, if I have to say, what are the key elements that an alternate data set should reflect, are around what are the habits that it is telling us as a lender, what is the behavior of a consumer. You mentioned about driving a car as an example. Now, how you drive your car reflects a behavior that you have, and it turn can be actually fed into credit decisioning at some point of time. It shows your behavior. It shows the character of the person. How is he someone who's very, very meticulous, regular with his things and all that stuff. And it shows the consumer preference. So these are key components which the data set should reflect when it comes to alternate data, and then fed into any kind of decisioning engine. But on top of it, we should not forget that it can only be done when there is things like artificial intelligence, deep learning, and all that stuff riding on top of it, because then it starts making it to a structured format and make relevance for anyone to consume that data.
Yeah, no, I think Bikram, that's really, really insightful and really gives a very good perspective of that, how decisions are being sort of looked at in future, and what kind of data sources are could be used. But at the same time, as a consumers, we also have a responsibility to ensure that we only agree to share that data which is relevant for the decisions we are looking for as far as our lending is concerned. So we have some time. Maybe we'll come for the questions in the last. But one more quick question to you, Bikram. We did talk about the credit decisioning, underwriting quite a bit, and we covered quite a bit of that. We probably just bringing a thought on the fraud side, right? Because obviously, when you are underwriting, when you are making a credit decisioning, you are looking at ability to pay, intent to pay, past records, etc. So let's say even if there is a intent to pay and there is a ability to pay, but the question is that what has been the past track record? What's the tendency of a person, or what could be the possibility that this could become a fraudulent activity kind of thing? So anything you would like to add on to that, or maybe some one or two data sources or data point of views which could add into making a decision and segregating some of those sort of kind of customer base?
Yeah, see, before I get into very specific on the consumer data which is getting used at a consumer level, I would say at an aggregate level, how can data be used? So for example, today there are platforms available which can drill down, consumers in an anonymized fashion, of course, but can drill down in a micro market level, on a geotagging level. As an example, even Experian has such a platform where this can be done. Now, how does it help? For example, if a lender is lending at a place, fraud detection is something which is important, and fraud prevention is something which is very important to him. Now, if they find that at a geotagging level, they are able to find that in a certain small micro market, they find that there are high fraudulent activities which are happening, or there are tendency where such activities are going to happen as a matter of fact, or they find something of that, they can actually take very conscious call when they are underwriting anything at that point of time. So outside of the fact that what are we doing at a consumer level, when a credit or a risk team is writing the policy for the organization, these kind of data sets become extremely important. These platforms become very important for them, because these platforms in turn help them, reach out to a larger policy making, because, the application comes at a much later date from that area, but the policy has to be built first on that.
Right. No, I think that's very important. So what do you mean? I mean, just taking it a little bit forward, what you're saying it as an example, let's say use case are basically at a pin code level. We know that a pin code level or a micro market within the pin code,
yes,
we should be able to sort of look at that, the possibility of data of the fraud from the past, and then we can sort of make a credit policy decisions on that. Yeah,
that's right. So it is not it's not pin code, because pin code does not help, because pin codes are wide, right? So it's something, for example, where we can say it's a 200 by 200 grid or something of that nature. So that's part one. So that is where some primary data is available where you are able to assess. Outside of that, there are a lot of alternate data sets. Just as an example, Experian runs the country's largest fraud repository, or the largest application fraud repository. And that's where, for example, if we impose that data on top of it, that's something which is not, if I might say, publicly available data, but is primary data, because we know that this is coming in as is part of our fraud repository. So those kind of data, which is a combination of primary as well as, alternate data or secondary data, when both are put together and structured, that's the intelligence which starts building on top of it. But coming to the point which, you also mentioned about, fraud, I'll just take an example, when someone is, today, most of the, the credit transactions are starting from a mobile phone, as an example. And that's becoming the port of interaction also with the consumer today. So when, it starts, what are the things that a device, as an example, the handset that you carry, what are the things that it can tell you? That also is a lot. So, as an example, when someone is, filling in an application online on the phone, so does the device, or does the intelligence from the device can be gathered to tell that, is there the user and the device, do they share a history? Or is it that, for example, Sachin is using my device and doing something? So is there a history to that? And this is available today. So this is not something that I'm talking hypothetically can be done. This is available today, right? Does this device configuration, is in line with the user's preference? As an example, let's take, me as an example. I am someone who might not take a STPL but might take a BNPL. So, if I'm taking a STPL, should someone be, conscious of the fact that why would he take a 1 lakh rupee or a 50,000 rupee loan as an example? Third thing around is that is the device impersonating multiple users? Is there a malware on the device? Is this device associated with any previous crime? And these are all data points that we are talking which are coming in from a device instead of coming in from any primary source of data which is coming. So that's the reason this alternate data starts playing a very important role when it comes to fraud detection.
Yeah. Well, I think this really, great insight. So I think we are about 4.5, 5 minutes left, so we could continue to talk for hours on this topic. But I see that there might be curiosity among the audience as well. So happy to have questions. I can see some hands raising. So requesting for the mic and for the audience to ask the questions, please.
Thank you. My name is Madhur. We are seeing, in terms of data aggregators and data companies coming up, three types of companies that are in terms of sourcing the data. One can be, as you were rightly saying, taking users' consent and taking mobile analytics, device data, and converting that to useful analytical models. The second is publicly available data scraping and social profiling of the customer, whatever footprint they might have left. And the third is leveraging the already existing data sets, data providers, buying data from them. We are seeing all three types of companies providing some models on these three. Which of these three companies do you think sustainable from a regulatory point of view, from a long-term perspective? Like, are all these three sources? I know there's a lot of gray area in terms of getting this data. So, which of these three do you think is sustainable model from a regulatory point of view going in future?
Madhur, I will limit it to how we look at from an Experian perspective, because we are a regulated entity. For us, anything which is consumer consented and within the regulatory framework is something which is sustainable. Outside of that, it's a matter of time here or there, be it through the regulator, which is RBI, or be it through the data privacy bill, which will now subsequently come in the new avatar whenever it comes. Which is going to, put a strain on that entire piece. So when we look at data, even as a bureau or as a regulated entity, we are very, very clear that this data has to be 2-3 things which are like basic hygiene for us. One, has this data been consented? Does the customer even know that his data is getting used, and what is it getting used? More importantly, two is that once it is used, the customer should get to know that his data has got used, and third, the data should lie within the boundaries of the country. So these are hygiene factors that we go with, and to us, if we have to look at any kind of data partnerships, also we will always keep these hygiene factors in mind for any kind of thing. We will not do anything which is on the sidelines. While it in the near future it will make a lot more economic sense for us, but I think it is not a sustainable piece. Unless Sachin, you have a different.
No, absolutely. I fully agree with him. And I mean, while people keep experimenting with new things in the hope that those things will get covered in terms of regulation, it will be allowed, etc., and obviously those experimentations people continue. Data is being captured from everywhere, whether it's online, offline, tags, this, that. It's a question of that, where is the data to be used by that company, whichever company that forms in that category, and then regulation will apply accordingly. And as I think Bikram mentioned, there are RBI is one of them, so which is on the lending side, on the basically on the capital market side you have SEBI, insurance you have IRDA, and then you have TRAI on the telecom side, right? And obviously I'm seeing a lot more regulators will come, because the data is not only being captured from here, I mean it's being captured from other sources also, and as data privacy bills etc. are becoming more and more robust, I think the customer consent or the use of data will become a lot more I would say lot more refined kind of activity, rather than free for all, which goes on sometimes, and then we have to do the course correction. Yeah.
Hello.
Yeah.
Hi, I'm Radhika Biani from Narottam Seksaria Family Office. So here at the event, we have been hearing a lot about financial inclusion, and I think alternative data and emerging technologies is the key to bring that inclusion. But I understand that product customization is required to include these people, uh, to include them, these people into financial services, and product customization to the certain extent is required for the same, and that customization, which includes seasonality of their businesses into consideration, is a key. So is there a way we are making business seasonality available in a cost-effective way?
Yeah, so I'll give it a shot, and then Bikram, you can definitely bring your perspective, expert perspective, I would say. So yeah, I mean, financial inclusion, when we talk about, obviously I'll just take 10 seconds to, let's say, broaden it up. We are talking about people who are basically not banked or unbanked, or do not have access to finance, let's say, right? And those set of people could be in urban areas, could be in rural areas, could be in semi-urban areas. Primarily, they are more tend to be towards semi-urban and rural areas, right? Now, the question is that the product fitment for them. Very good point, and I think many of the startups, good to see that they are working on it. I mean, personally, I've engaged with a lot of startups who have created products for those kind of segments. Obviously, within the regulatory boundaries, they have taken the approach of utilizing certain kind of data, which is, if possible, to get. I mean, if it's a farmer, right, you don't have a salary data. You have basically a farmer income coming only in crops time, expense happening in a different time, most of the expense happening in cash, right? But then there are ways and means to look at that, whether the farmer is good enough in managing his business or her business, and there is an ability to pay back, right? So there are various kind of sources. I mean, people are talking about, the whole data which is coming from land records or coming from the rural economy. I mean, it could be like, just hypothetically saying that a farmer is using a state transport bus and there is a ticket he uses, and probably he spends 2,000 rupees in a ticketing, right? So that could also be used. So I'm sure companies are utilizing this kind of data in different ways, and there are products there, but obviously it's a long way to go. And I'm sure with the startups and the fintechs coming in an aggressive manner to basically cover that gap, I can see a lot of innovation coming in that space here. Thanks. I think there was one more last question. Time's up. So if we are...
Let's take it off.
Yeah, done. Thank you so much. Thank you. Wonderful.
Thank you.
Thank you.